Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
The market takes a dip after a strong week. Litecoin acquires a bank. Vitalik says centralized exchanges can, quote, burn in hell. Another ETF proposal to be evaluated by the SEC. Bancor gets hacked for over $20 million. And we explore the Coinbase trading volume to see whether the real volume is coming back into the crypto markets. It's another down week on the markets, with the markets hovering around $250 billion, Bitcoin fighting off $6,000, and you're watching Crypto Trader on CNBC, the world's global crypto show. We've been on a crypto world tour for the last 10 weeks, visiting crypto hubs all over the world, from Berlin to Barcelona, Seoul to San Francisco, and last week we came to you from Taiwan. If you missed any of our travels, they're all available on YouTube at CNBC Crypto Trader. And if you are watching us on YouTube, now's a great time to hit the little red button on the bottom right-hand corner. It's good to be back in studio, good to be back in Johannesburg on a week when so much is happening in the crypto markets. So let's not waste any more time and get right into the biggest stories of the week. Litecoin now owns a stake in a traditional bank. Yes, that makes Charlie Lee a traditional banker. The founder of Litecoin broke on his Twitter earlier this week that the Litecoin Foundation had partnered up with TokenPay and bought a stake in a German bank called WEG. The move is seen as a very strategic move to get crypto to infiltrate the traditional banking system. It also paves the way for more mass adoption of crypto in the real world. Joining me all the way from Taiwan is Charlie Lee, and he is the founder of Litecoin and also now a traditional banker. Charlie, you now own a bank. Is that true?
Yeah, we actually bought a stake in a bank. So not the whole bank, but 9.9%, so close to 10% of a bank.
Tell us more about the bank.
It's a German bank. It's a bank with banking licenses. It has customer accounts, but its main focus in currently is housing loans.
Okay, does this bank actually have retail branches?
It doesn't right now, and it's something that we can kind of spend resources to help it build out.
What was the strategy behind buying a traditional bank?
I guess the strategy is if you can't beat them, buy them, right? So I think the main strategy is that having a bank gives us access to things like potential like debit cards, doing like a Litecoin debit card, or having like a merchant processor, right? Creating our own merchant processor. Just being able to kind of easily connect to the current financial rails is very powerful.
Now, many experts have said that this is a strategic move to get crypto to infiltrate the traditional banking system. Is that the strategy?
Yeah, if like it's actually quite hard for crypto companies to get bank accounts, right? So Litecoin Foundation has tried and failed to get bank accounts in many different jurisdictions. So if we have partial ownership of a bank, it's actually quite easy for us to get a bank account now. So that really helps us also, right? So it's kind of a multiple wins.
Charlie, you bought a 9.9% stake in this bank. What mechanism did you use to buy it? You didn't pay in Litecoin, did you?
No, we actually had, we worked with, we have a partnership with another coin called TokenPay. So TokenPay had a deal with this bank to purchase pretty much the whole bank, but it requires regulatory approval. So, but you can buy like 9.9% without regulatory approval. So TokenPay bought 9.9%, and via their partnership with their deal with this bank, we also have a 9.9% stake in this bank. So we're partnering with TokenPay to kind of get this deal done.
So who actually owns the stake in the bank?
So currently TokenPay owns 9.9% and Litecoin Foundation owns 9.9%.
So this is a partnership between TokenPay and the Litecoin Foundation?
Yeah, we're actually looking for other partners to actually come in with us to purchase part of this bank, to kind of just connect the crypto ecosystem with the legacy like banking ecosystem and try to see if there's neat ideas and neat solutions for crypto.
Okay, now what about the practical stuff, such as the management at the bank? Are the management going to remain, and are they crypto friendly?
It is. It's not going to change immediately. I mean, we're still kind of working things out and trying to see if I will probably become like a board member of the bank, and we'll see. I mean, we just started like figuring this out, so.
Cool. Now that the deal is done, what can we expect from this deal in the next few months?
So, I mean, it's still pretty new, right? This deal the ink hasn't dried yet, so we're still figuring it out. I think the general idea is to work on merchant processing, crypto debit cards, and I guess those are the two major things, and also potentially like crypto accounts for bank customers, right? So imagine like your bank, the bank also has, in addition to like whatever US dollar, euro accounts, you also have like Bitcoin and Litecoin accounts. I mean, that would be pretty like first of a kind, right?
We are one ETF ruling away from a bull market. At least that's what some traders out there have been saying. And this week we got news that the SEC is once again evaluating a new ETF proposal. This time it's for the Chicago Board Options Exchange. Now, you may recall that last year the famous Winklevoss application for an ETF was declined, and the SEC mentioned several reasons, such as the fact that the price was too volatile, such as the fact that there was no real custodian, and most importantly, that there was no regulatory framework. But this time it's all different, and it seems that all those boxes are ticked. So can we expect a favorable ruling from the SEC in August? Brian Kelly, what do you think?
So it's hard to say. I mean, the SEC and the CFTC have been extremely thoughtful about the way they've gone through their regulations. This ETF has a few things that are a little different. They have custodianship, they have insurance. The price that the ETF is going to trade at is probably likely to rule out retail investors. So I understand what they're trying to do. It's unclear to me whether or not the SEC will see it the same way. But listen, it's an encouraging step in this ecosystem, right? We're an emerging technology in an emerging financial market here. So it's an encouraging step to see them going through this, and especially to have the CBOE stamp their name on it.
Brian, given the fact that we've now ticked all the boxes, what possible reason could the SEC have for not approving an ETF this time around?
Well, you need to remember there's still some investigations out there. The market is still very fragmented globally, so they don't necessarily have the regulatory reach to some of the markets, to some of the exchanges that trade a lot of the volume. So I can see them saying something like that, or at least objecting to that until they got their handle around it. But that being said, both the CBOE and CME futures markets, those are regulated markets trading here in the U.S. There's a lot of volume trading on those. That volume's picked up significantly. So again, a huge step forward.
Now, if the ETF is approved, could this lead to a big inflow of money into the markets and then effectively the beginning of a bull run?
Depends how we end up, how we go into it, how the market goes into it. If the ETF wasn't approved today, I think it would be a non-event based on how the market's trading. If between now and August 10th we run 20 or 30% higher, then you might see a little bit of a sell-off. I don't think it'll be as extreme as the last time because the hype doesn't seem to be there. But we're in the middle of July now. We've got a month away. Certainly hype in this market, can appear overnight.
Now how does an ETF actually impact the market price?
That's a great question, Rand, because it's not just about sentiment. What the ETF does is take supply off the market. So the way that an ETF works is that when somebody comes in and buys a share, then the market maker goes out and buys the Bitcoin. That Bitcoin is then stored away in cold storage. So it's no longer available for supply out there. So, if we think about 21 million coins overall, I think we're roughly about 17 million coins right now. If 10% of those coins were put into the ETF, that's 10% less supply on the market, which just simple economic supply and demand should be positive.
Brian, in your opinion, will this only affect Bitcoin or will this ripple onto the rest of the market?
Given the correlations that are out there between every single one of these coins, I would expect it to ripple throughout the market. I mean, one, many of these coins, of course, are priced off of Bitcoin. Number two, I would guess that people would start speculating that there are going to be other ETFs in a line, because now there's a path towards that. And it wouldn't surprise me, if this does get approved, the very next day, 3 or 4 more applications are in there. So I think it could have a very positive impact on the market.
Okay, so Brian, I'm going to put you on the spot here. What's your call? Are we going to get a yes, a no, or we need more time on the 10th of August?
If I had to guess and I was a betting man, I'd guess we're looking at a 45-day extension at the very least. I think if they were going to reject it, they may ask them to withdraw it before August 10th. So while I'm very positive and hopeful, I'm not sure that August 10th is necessarily going to be the date.
Brian, it's always so good to speak to you, my friend. Be well. Matti Greenspan, what are the people at eToro thinking about the likelihood of an ETF going through on the 10th of August?
Well, it's hard to say at this point. Last time we saw an ETF try to go through, the SEC struck it down, saying that there wasn't enough clarity regarding the status of Bitcoin. But now that the SEC has clarified a little bit better what Bitcoin is, there is a much better chance of it going through this time.
Matti, have we ticked all the boxes to allow for the launch of an ETF?
Yes, 100%. There's new OTC services all the time. eToro has just announced a new OTC service, Coinbase as well, and there's all kind of other OTCs coming online, so that certainly is not a resistance at this point.
Okay, Matti, let's say hypothetically that the SEC approves a Bitcoin ETF. What does this mean?
So basically, like I've been telling you since early April, Wall Street is going full on crypto. And at the moment, prices are falling, so they're not in such a big rush like they were in December. So at the moment, what they're doing is they're building bridges, specifically bridges of liquidity. So what this ETF could potentially do is basically a massive 8-lane superhighway.
Okay, now is this a 9-lane superhighway only for Bitcoin?
Yes, correct.
So do you think this could have an effect on the entire market?
So far, we've noticed a very high correlation between Bitcoin and all of the cryptos. When one is going up, the others are going up. When one is going down, the others are going down. That correlation tends to hold stronger on the way down, whereas on the way up, we see things a little bit more diversified. However, the trend of the market, especially when we're talking about swing trading or even medium-term holding, the trend of the market is usually pretty clear and goes together.
Okay, Matti, what's your bet? Are we going to hear good news from the SEC on the 10th of August?
I certainly hope so, Ron.
On a week where Vitalik said that all centralized exchanges can, quote, burn in hell, Bancor, an exchange which I always thought was a decentralized exchange, got hacked. The criminals got away with over $20 million worth of tokens, including Ethereum, Bancor tokens, and Pundi X tokens. Now, Bancor responded by effectively freezing the Bancor tokens, and that sent the crypto community into a spin, with many questioning just how decentralized the Bancor network actually is. I have the Bancor team on the line with me from Bretton Woods Hotel in New Hampshire, and it looks like I'm getting 2 for the price of 1. Now, guys, I'm looking behind you and there's some gray clouds, and they're probably indicative of what's been happening this week. What actually happened?
Sure. So it's great that the clouds are behind us now, but another thing that happened this week is that the Bancor network experienced its first significant security breach since our launch just over 1 year ago. An attacker was able to gain access to a wallet owned by Bancor, and through that wallet to steal millions of dollars worth of cryptocurrency from the Bancor network.
Eyal, I'm looking at you. How much cryptocurrency was stolen and what currency was it?
It was mostly Ether. We published that in the range of $12 to $13 million Ether.
Guys, the big question is, if Bancor is really decentralized, how did so much money get stolen, and whose wallet was it stolen from?
Yeah, so as with most things in life, they're rarely black and white. There are many types of decentralization, so I'll walk you through ours. Bancor is a decentralized liquidity network. The reason why we call it this is because all users own all their own wallets and all their own funds, and all transactions happen directly peer-to-peer. Bancor never holds any user funds, never owns any user wallets or accounts. And in fact, even during this security breach, users were able to access their own wallets, to withdraw their own funds, to move their funds into different wallets, and have complete control over their financial assets and their financial destiny, even while the network itself experienced a breach.
But Galia, if users had control over their own wallets, whose wallet actually got hacked?
So it was actually a Bancor-owned wallet that was hacked. No user wallets were compromised. No user funds were compromised. The reason why the debate is now unfolding in the blockchain community, and it is so important to have this conversation, is that one of the things that happened after the breach was uncovered is that Bancor was able to use the designs of the Bancor Network token smart contract, designs that were made public before the launch of the Bancor Network token last June, in order to shut down the system and freeze the movement of the Bancor Network tokens. This enabled us to recover over $10 million worth of stolen cryptocurrency and mitigate the situation. Many are calling this a centralized feature, but the network itself is in fact very decentralized. And these controls, these designed controls, when well designed and when transparently introduced, actually have a tremendous amount of preventative power for networks to be able to mitigate uncertainties, to mitigate emergency situations in what is still a very new technology and an evolving landscape.
We wrote a blog post about it called Learning from the DAO, and I think the DAO is a great example of what happens when you don't have those security measures, and we all saw that.
Now guys, I'm really a big fan of these mechanisms to protect the ecosystem, and especially if they're announced before the hacks. But I'm still confused. Whose money got stolen? Was it Bancor money? And if it was Bancor money, is Bancor $20 million in the minus? Also, why did Bancor have so much money in one wallet?
So the Bancor network is actually built with a reserve system. The Bancor network token, BNT, holds a reserve in Ether. That reserve is integral to how the network operates. And so that is the wallet that was compromised. Again, no user wallets were compromised and no user funds were compromised.
So, if I understand you correctly, you froze the Bancor tokens, but the thief made away with the Ethereum and the other tokens. Does this mean that Bancor is now minus $20 million?
That means that Bancor is now minus the amount of tokens that the thief has control over. We are working very diligently with many, many members of the community, including centralized exchanges and other decentralized exchanges, to flag the accounts of the known accounts of the thief and prevent the criminal activity from dispersing through the industry and through the network. It's been actually heartwarming and inspiring to receive so much support from the blockchain industry, not from all of it, but from some of it, and that is wonderful because it really takes everyone working together to both understand, analyze, prevent, and deal with these situations in real time. So just to make clear how it works, when a thief gains access to tokens, it's not the tokens that they generally want, or maybe immediately what they want is cash. And the way that they can turn those tokens into cash is by moving them to centralized exchanges where they have accounts or create accounts, and then on those exchanges selling those tokens for dollars or euros or the other currencies that they can kind of disappear into the economy with. As you know, one of the beautiful things about blockchain is that these accounts and tokens are very, very transparent to the entire public because they're on a blockchain. That doesn't mean we know who has them, but we can very clearly see them moving from wallet to wallet and moving throughout the network. So when we identify those tokens and we see them moving to an exchange like Binance or others, it is the collaboration between the entities, between Bancor and exchanges, between any project and another project in the industry that allows us to share the information, prove the information. Many entities are involved in this process, and then hopefully agree on flagged accounts that are problematic and freeze them on the centralized exchange side to to prevent the criminals from selling those stolen tokens for cash and disappearing.
Next up, we take a look at how much real-world adoption there is of crypto, and more specifically, we look at the Coinbase trading numbers. So stay tuned. And if you are watching us on YouTube, now's a great time to hit the subscribe button. Coinbase reported last year that they did over $1 billion in trading revenue. Now that sounds like an impressive number, but my next guest says that the numbers may not be as impressive or encouraging as they seem. Jonathan Mary is in Tel Aviv, and he's the founder of Barrel Protocol. Jonathan, what are your findings on the Coinbase data?
Sure. So we've been looking at Coinbase transactions dating back to the early January 2017, all the way till a couple of days ago. And we found some really, I think, jaw-dropping numbers. Specifically, looking back at January, we tracked all the Coinbase transactions for 2017. And they came out with a couple of really important announcements around making over $1 billion in revenue. And we looked at those numbers, and first we saw that about 50% of that revenue came in December alone of 2017. So 50% of Coinbase revenue that is coming from transactions came in December of that year.
Are you saying that 50% of the entire Coinbase revenue for the full trading year, $500 million, came in one single month?
Correct. So most of Coinbase revenue today comes from consumer transactions. These are people who downloaded the app and bought maybe their first Bitcoin, their first Ethereum. Yes, over 50% of that revenue came from December alone.
Well, that may be a great sign. It could mean that the industry is growing, right?
Well, when you see that kind of number, you hear 1 billion revenues in 2017, you start kind of imagining what's going to happen in 2018. Is it going to be 1.1 billion? Is it going to be 1.2? Is it going to be $2 billion? We continued tracking their performance into 2018, and it tells a very different story.
What do we see when we look at 2018 numbers?
So if you start tracking their transactions January and February, you're seeing a precipitous drop. If you look at the information that I sent you, it has the kind of BTC share of transactions on Coinbase. And you see that number has been dropping for January and then for February precipitously month after month after month, all the way through May, to a point where transactions in May were 90% down over the transactions back in January, which itself was down from December a month before.
Now, that all looks good, but it also looks like we see a small spike in volume in June.
Yes, so we don't know if this is kind of what's called a dead cat bounce, but I do see a little bit of hope in that number, that after 6 months of month after month drop in overall transaction, this is both in number of transaction and total revenue, you're seeing a bump. It's a small bump when you look at January, but it is a big bump considered to May, so about 10% bump in June over the May numbers. And by looking into July, that process continues. So based on what we're seeing, the worst is behind us.
So we have had some volume, but it could be a dead cat bounce. If you were a betting man, would you bet that Coinbase could beat last year's revenue this year?
It's going to be very, very hard. We compared the numbers 2017 to 18, and it's basically a mirror image, and not a very nice looking image coming from that mirror. So last year, they started from a very small base and slowly grew into kind of a blockbuster of December. And then January is down, and then January is continuously down all the way through June. I do think that we're going to see an uptick in Coinbase transactions in the second half of the year. That's what we're already seeing for the last couple of weeks. But it's going to be very, very, very hard to reach the numbers that they did last year.
Jonathan, what's your interest in these kind of statistics? Who are you and why this data?
Sure. So there's this huge market called alternative data. A lot of people don't know what this market is all about. You basically have the Bloomberg data, which is kind of the public data that's out there, and then you have alternative data. Alternative data is really the stuff that you and I are creating with our clicks, with our purchase information, with our geolocations, with our check-ins. All that data today is considered alternative data. It's a $600 billion market today. It's going to be $1 trillion next year. And this is the type of data that you get out of it. So people's transactions, people's check-ins, this is the type of data that allows us to get the insights that you're seeing here. And one of the key challenges around bringing that data to market is this whole issue of privacy and compliance. We know this firsthand. We've been in this business for 5 years. And what Barrel Protocol is all about is really trying to remove the personally identifiable information while keeping the statistical aggregate insights that you see here before you.
That sounds fascinating, and I know both you and I are in Korea next week, so we can catch up and talk about Barrel Protocol.
Let's do that. Looking forward to it. We're going to have some big announcements in Korea next week, and I look forward to seeing you again in person.
Can we get your commitment that you'll break any big announcement on CNBC?
I will. Any news we have, we're going to come first to you, and at least as it relates to Korea, you're number one.
You are a trading master. You see trading opportunities where others see coincidences. Charts and patterns are everywhere. You can run with the bulls or be at one with the bears. So don't waste another pip and take your talents to eToro. See why so many top traders choose us as their main trading platform. Start trading on eToro today.
Some are calling this a crypto winter, with most tokens not weathering the storm very well. But there are some projects, though, that are experiencing more of an icy spring than a winter. GoChain is one of those projects that has doubled in value over the last week, despite the poor market. I've got their founder on the line, Jason Decker. Jason, what is it about GoChain that has given it immunity from this winter?
Rand, I think it's it's just the fact that we are a network protocol. And we've come out and we've been executing and bringing ICOs on the platform. 2 days ago, we announced our first ICO, and by next week, we'll have over 100 million in ICOs that are going to be launched on GoChain.
Now, Jason, a lot of our viewers don't know what GoChain is. For those viewers that did miss our last show, what is GoChain?
So GoChain was essentially conceived to be a better, faster, stronger Ethereum. We took the Ethereum Go code base, hence it's called GoChain, and we optimized it for speed and performance. And so any current Ethereum users can lift and shift and seamlessly transition to GoChain, get an immediate 10x in decentralization, 100x faster speed and performance, and be 1,000 times greener right now. Our mainnet is live. We launched it about a month ago at 1,300 transactions a second. So we think we're the only production-ready, scalable, enterprise-ready blockchain solution out there at the moment.
Jason, I'm going to have to challenge you on some of those big statements, and specifically when you compare yourself to Ethereum. You claim that you're faster, scalable, and more secure than Ethereum. How can you back up such big claims?
I know Vitalik has said, there's kind of the trilemma which you just spoke of, and the way that we did it is we took a step back towards centralization with using proof of reputation consensus algorithm, which is an upgraded form of proof of authority. But our view is that to be truly decentralized, it's just not possible in today's day and age. And so we think you have to take one step at a time. And so we took a step back to achieve that. And in terms of the faster speed and performance, we changed proof of work, like I said, to proof of reputation, so that helps speed it up. And then our lead dev and architect, Travis Reeder, he founded and built a company called Iron.io, where they pioneered serverless cloud computing to over 1 million transactions a second. So we think that's pretty relevant, in what we're doing.
Jason, you mentioned that you are not that decentralized. What does that mean, and what is the possibility of a 51% attack on the network?
Yes, so currently there's about 11 nodes running on the network. We're building out to 50. So the way it works is we've got corporate entities running the nodes, and we vet them. Basically, they apply, we interview them, and then to bring them on, we basically make sure they meet the minimum hardware specs. We get them the software, we debug it, and then we run them on our test net for 4 to 7 days at full blast to make sure they can handle it. Only then will we allow them to come on the network. So they are permission trusted nodes in comparison to Ethereum's unpermissioned, untrusted nodes. So there definitely is a difference.
But does that not make you vulnerable to a 51% attack? All I have to do is find and coerce 26 of the nodes, and that's a huge attack on the network.
Sure. And I kind of lean on, Dan Larimer and the EOS guys. I mean, they're saying that, 21 or 22 is perfect decentralization, and we're at 50. And so we think that the odds of 25, 26 companies risking their full market cap and corporate reputation to compromise the network is the chances of that are very small.
Okay, Jason, let's talk about speed. Anyone can claim 1,300 transactions per second in a test environment. How can you give us comfort that you'll achieve this in the real world?
So a couple things on that. Sure, in a vacuum, anybody in a testnet can show anything. And the reality is at 1,300 transactions a second, that equals about 500 gigs of data a month. And so scaling is ultimately a data problem. So, Travis, having built, Iron IO to 1 million transactions a second, he's pretty familiar with this problem. So we did 3 things: optimize the code base for speed and performance, change proof of work to proof of reputation, and then we're using off-chain data storage and data compression, similar to what Travis did at Iron. And those are the 3 things that we're using to speed up the network.
What is proof of reputation? How does it work?
Proof of reputation is basically corporate reputation is on the line, so that's the only thing at stake. So proof of work, you've got energy at stake. Proof of stake, you've got money at stake. But in proof of stake, it's already been proven that if you gain enough resources, you can create a 51% attack. With proof of reputation, you'd have to get 26 companies in our instance to risk their whole market cap and the reputation, which is probably worth more than the network or the sum total for those companies would be. So that we think it's a much stronger and better way to go.
Now, Jason, both you and I know that the success of a chain is not only in the tech, but also in the developer community. And I'm not going to expect you to tell me that you've got this huge developer community when you're such a young chain. But is there a plan to build a solid developer community?
Sure. That's one of the reasons that, we basically are an Ethereum fork, is that, everybody knows and loves Ethereum, and they have by far and large the biggest developer network. And because anybody can that builds on Ethereum can deploy on GoChain and vice versa, there's basically no risk. And so that we think that developer community is already there. How we plan to build it are, do a bunch of hackathons, get a bunch of ICOs. So right now we've got something I like to break on your show. MB Technology has just partnered with us to bring $500 million in ICOs on the GoChain platform. The first of which was Solister Health, Solister.io. They're building an interoperability layer on top of GoChain. And if they achieve their mission to basically connect all the healthcare blockchains, it should result in dozens more ICOs on GoChain.
So let me be clear, you're saying that you have a deal that guarantees you $500 million for developments on GoChain?
Correct, and that's just from one group led by Ben Gadenzi. Ben in the last 8 months has raised over $500 million for deals, and he saw what we were doing and wanted a strong blockchain protocol to bring his projects. So we think that's just the beginning, because we're talking to other potential partners and hope to announce more deals like that very shortly.
Now, Jason, we hear from our sources that GoChain is in discussions with Microsoft. Is that true?
I can't comment on anything that is not public information or already publicly released, so I can't comment on that.
Digibyte is another token that isn't having any part of this crypto winter. Unlike GoChain, Digibyte is not a new player in the space. It's been around since about December 2014. Digibyte was one of the best performing tokens in 2017 and has one of the strongest communities I've ever seen out there. I've got Jared Tate with me from Singapore. Jared, Digibyte. What is Digibyte?
Well, Digibyte is a completely decentralized UTXO-based blockchain. It's 40 times faster than Bitcoin. It's 10 times faster than Litecoin, and it's actually 5 times more decentralized. It's also currently the longest major blockchain in the world today.
Now, Jared, you mentioned that Digibyte is 40 times faster than Bitcoin. Does that mean that you have blocks that clear every 15 seconds?
Yes, absolutely. So we've had that 15-second block time for almost 3 years now. So we've definitely tested it and proven it can work in the wild.
Okay, you also mentioned that Digibyte is 5 times more secure than Bitcoin. What do you mean?
Well, so what you can actually do is, because Digibyte has 5 independent mining algorithms, you could literally take all the Bitcoin mining power in the world, throw it at Digibyte, and you would only get 20% of the blocks, because that's only one of the algorithms. So the original idea is you had all these special ASIC, manufacturers that are now centrally controlled by just, one major company. And you could actually basically put things on an even keel with like video game, gamer miners, or just people mining with a regular desktop computer.
Are you saying that unlike Bitcoin, you've got 5 proof of work algorithms?
Yes, 5 proof of work mining algorithms. So in order to attack Digibyte, you would have to take over a majority of basically all 5 of them. So you would have to have various different types of hardware. You could actually, like I said, take all the Bitcoin mining power in the world, throw it at Digibyte, take all the Litecoin mining power in the world, throw it at Digibyte, and you would only get 20% of each of those 2 algorithms, or of the total blocks.
So it sounds like you're saying that you've got a chain that's faster, more secure, and more scalable than Bitcoin. But is anyone actually using Digibyte?
Yes, absolutely. We have, if not the largest, one of the largest, alt communities out there. We have a very, very large grassroots organic, user base from across the globe. I mean, if you just look at some of the data in terms of social media engagement, etc., we've got a lot of very talented developers. We were never an ICO. There is no centralized company behind Digibyte. It literally is a community of tens of thousands of dedicated individuals and developers that are working hard each day to make Digibyte better.
In terms of merchant adoption, is there merchant adoption of Digibyte?
All the time. There's a lot of people that use Digibyte for arbitrage between exchanges. There are several, businesses that do accept it as payment. However, I don't like to focus on that because I feel like the currency use case is not the best use case for a truly decentralized blockchain like Digibyte. One of the focuses that we have is our blockchain actually was launched on January 10th, 2014 with the headline, Target 110 million customers' data stolen. And we truly believe that blockchain technology like Digibyte can fix 95% of the cybersecurity vulnerabilities in the internet today. So that's kind of our main focus is using blockchain technology for real world issues that are outside of currency.
Jared, give me an example of some of these use cases.
Well, for instance, I don't want to go too much into it, but I actually have spent the last 6 months working on a prototype for a real estate application that's backed by the Digibyte blockchain that we'll be launching later this year. But it's completely outside of simply payments, but we're talking about actually securing, those real world assets by a real world proven blockchain technology. Another use case that's been well demonstrated on top of Digibyte is actually international trade and logistics and document management. You have the ability to secure contracts, with a very, very impressive array of new technologies that basically leverage a lot of the different unique aspects of a blockchain. For instance, you can use the private keys for more than just sending and receiving payments, right? You can use those to identify somebody that's signing a document in a contract. You can use those to identify and timestamp when that contract actually happened on the decentralized blockchain. So there's a lot you can do. If you go to our website, digibyte.io, there's a breakdown that kind of explains, whether it's media, video files, property rights, a lot of people use the term smart contracts, but I think it's actually more than that.
Jared, why do you think Digibyte has managed to buck the trend when it comes to the crypto winter?
I feel like the market is clearing itself out. I think some of the more serious proven technologies are starting to rise. People are seeing it. I think, this last fall, there was such a massive run up. There was just a flood of new people. Well, a lot of those people have had, 6, 7, 8 months now to start doing research. But also, we just released a new Android wallet. We've got some new companies that have come out and they've started using the Digibyte blockchain for various and assorted things. We've got a really innovative solution that we actually came up with, what we call DigiID, that we've actually rolled out into these wallets, where you can actually effectively use your crypto wallet to log into websites, to log into multiple services, and effectively replace passwords and two-factor authentication. So that's one of those other areas that I was talking about that really has a tremendous amount of potential for practical everyday use cases. So I would encourage people that are listening to go check out DigiID and see how a blockchain can be used, a crypto wallet can be used for something other than just simply sending and receiving money.
That's Jared Tate, and he's the founder of Digibyte all the way from Singapore. Now, I'm always amazed at the strength of the Digibyte community. No matter where you go, Twitter, Reddit, GitHub, Digibyte is always there. Now, speaking of strong communities, another token that has a really strong community is Elastos. and they claim that they're rebuilding the web. So I decided to do some digging to find out what all the fuss was all about. Rong Chen joins me from Texas. Rong, what's wrong with the old web?
Well, the old web is decentralized, which is good, but the old web is decentralized is also bad because of we don't know whether the other side of the web is a dog or it's a person. No one can tell whether the website is genuine, and there are a lot of DDoS attacks, there are a lot of privacy leaks. So then people kind of start to lose the faith in the old web. So we're trying to build another web, which is much more secure. And also on the web, we can do peer-to-peer business.
How do you actually achieve this? Are you insinuating that every player on the web will have some kind of identity in the new web?
Yes, correct. First step would be everyone, every person, every website, every digital asset should have an ID, which we call it decentralized ID, because the ID is being issued through our blockchain.
So every player in the web has a decentralized ID, and therefore you know who every player is, and then you basically recreate the entire internet like this.
Correct. We're trying to build a new internet. There's a TV series called Silicon Valley, and people are trying to build a new internet. Actually, we're very much in sync, or a little bit ahead of the TV series. And we're going to release the new web alpha version by the end of August of this year.
Rong, what kind of infrastructure do you need to build the new web?
The new web has to be peer-to-peer. So we're building actually a virtual peer-to-peer network on top of the packet-switched internet. Because there are two kinds of networks. The one is so-called a packet-switched internet. The other one is the peer-to-peer virtual kind of telco kind of network. And if you see the trend, VoIP, VoLTE, the telco companies are trying to build a virtual peer-to-peer network on top of the decentralized packet-switched network. That said, we also need one more twist, which will make the telco a decentralized telco. So then no big brother or no website issuing IDs. The IDs are issued by the blockchain. So we're trying to build a decentralized carrier.
So it's a decentralized internet, but I'm assuming the internet has one enhancement over the current internet, and that is that it has its own currency, right?
The new internet has its own tokens because of the internet is decentralized. The new internet is also decentralized. In order to make this new web decentralized, somehow people have an illusion the internet is autonomously running. In order to make the internet autonomously running, actually, there are miners behind the scenes, right? Because the miners collectively are boosting up this new web. But on the other hand, if there's no currency or no reward to the miners, then this website will not exist.
Rong, is this thing really a reality? And when is it going to be live? When is there going to be something we can play with?
The token has been live since December 22nd of last year. And this new web, very, very early versions of it with the browser, with the websites, with the personal drives and some digital assets, very, very rough prototype will be released by the end of August this year. So less than 2 months.
Is there a big developer community building infrastructure for this internet?
Well, the team is actually not that big. We currently have about 60 full-time employees working with Elastos Foundation with a core team. But on the other hand, the front startups, we have people doing the smart web browser. We have the people doing the decentralized carrier. They're not part of the core team. So collectively, we have about more than 100 developers currently working on this project right now.
Rong, do you think that Elastos will one day really replace the internet?
That's my biggest pipe dream.
Okay, and if our viewers want more information about this project, where can they go?
Well, they can go to GitHub /Elastos, find the source code over there. And also they can go to elastos.org and find all the PR information. And also we encourage them to go check out cyberrepublic.org and to propose their own projects and get rewarded accordingly.
Certainly one of the bolder projects out there. That brings to an end our show for tonight. Next week, we will be in Korea covering the World Blockchain Week, which promises to be the biggest week in crypto history. If you are around, come join us at the Beyond Blocks conference on Monday and Tuesday. And if you can't make it, don't worry, because I'll be streaming live updates all week from the conferences and from the parties. I'll be on Twitter at CryptoManRun. Until we meet again, from the crypto capital of Asia, trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.